students, welcome to lecture number 39, where we will be continuing with module number 6, minimum alternative tax under subject direct taxation. So as we know that this module covers how to compute the taxable income of a company with special reference to MAT and problems on MAT. So today we will be revising the computation of taxable income of a company with special reference to MAT, and we will be continuing with the problems on MAT. How to calculate MAT is, you all know that as per MAT provisions, a company has to pay 15% of book profits as tax plus surcharge and cess if applicable. So surcharge is applicable in those companies where the company's total income is exceeding 1 crore but not exceeding 10 crores. The domestic company has to pay 7% surcharge, foreign company 2% surcharge, and in case of companies whose total income exceeds 10 crores, they need to pay surcharge of 12%. In case of domestic companies and foreign companies, 5%. So how to calculate this book profit? Book profit is nothing but the net profit as shown in the P&L account as increased and decreased by some items. So towards my left hand side, we have items that have to be added to the net profit, and towards the left hand side, we have the items that have to be deleted or reduced or minused from the net profit. So the majorly that you have to add back to the net profit is income tax paid payable, any transfer you're making to any reserve, proposed dividend, provision for loss of subsidiary company, depreciation, very, very important, depreciation, including the depreciation on account of revaluation of assets, provision for unascertained liability, and so on. Deletions to net profit is amount withdrawn from any reserve, any exempt income, okay, brought forward losses or unabsorbed depreciation, whichever is less. Depreciation, excluding depreciation on revaluation of its assets, have to be reduced from the net profit, and so on. So these are some fixed list of items that have to be added and deleted from the net profit in order to derive at the book profit. So how do you compute? How do you start with the calculation? First, you see what is asked in the problem. If it is asked what is the tax liability that a company needs to pay, then you are going to calculate tax both as per normal provisions of income tax as well as per the MAT provisions. Then you're going to compare whichever tax liability is highest, the company is going to pay tax as per that provision. Suppose in the problem it is just asked to calculate the tax as per MAT provisions, that is as per 115 JB section, then you're just supposed to calculate the tax liability as per MAT provisions. Let us continue with problems on MAT. In our last class, we had done the problem number 3, but in problem number 3, we had completed the MAT, the calculation of net tax liability as per the normal provisions of income tax. Now let us see the calculation as per section 115 JB of Income Tax Act. So let us start. How do we start in calculating the book profit, students? First, we take the net profit as per the P&L account. So what is the net profit as per the P&L account that is given? It is given as 11,80,680. So we are continuing with problem number 3, which we had completed half in our previous lecture, where we computed the tax liability as per the normal provisions of income tax. Today, we are going to see the computation of the same sum under MAT provisions. So under MAT provisions, we know it is nothing but 15% of book profit. So first we need to find out the book profit. Book profit is nothing but you're going to take the net profit as per the P&L account, which is 11,80,680. So your first step will be writing the book profit, the net profit as 11,80,680. To that, we are going to add some items, and to that, we are going to minus some items. So This, as we know, is obviously the credit side because credit side shows all your income. Clear? So let us see one step. Sale proceeds of goods. This is neither to be added nor to be deleted as per the specified list. Sale proceeds of goods export sale. This also is neither to be added nor to be deleted. Next, amount withdrawn from general reserve created by debiting the P&L account. So this is an amount withdrawn from general reserve. So when amount is withdrawn from general reserve, should it be added or should it be deleted? Since it is in the credit side, so students, just see on the right hand side, amount withdrawn from any reserve. Let it be general reserve, let it be special reserve, let it be reserve created for any other purpose. So whatever amount is withdrawn from any reserve, that has to be reduced from the net profit. So students, this particular transaction that you can see, item you can see, that has to be reduced from the net profit. Next, amount withdrawn from revaluation reserve. Now, amount withdrawn from revaluation reserve to the extent that it does not exceed extra depreciation because of revaluation. See, this amount withdrawn from revaluation reserve should not exceed the depreciation on the revaluation of assets. So it is not exceeding, since this, if you see this point, depreciation, extra depreciation because of revaluation is 2,70,000, whereas amount withdrawn from revaluation reserve is 1,50,000. So tell me students, when amount is withdrawn from any reserve, will you add it to the book profit or will you minus it from the book profit? You will deduct it from the book profit, because deletions to net profit, the number one item is amount withdrawn from any reserve. Let it be revaluation reserve, general reserve. But remember students, when you're taking amount withdrawn from revaluation reserve, make sure that the amount does not exceed the extra depreciation because of revaluation. Next, business expenses. There is no item, specified item in the list, explanation 1 to 115 JB, which says that business expenses should be added or deleted. So we are going to ignore this while calculating the book profit. Next, depreciation normal. So depreciation is an item that has to be given both the effects. It has to be added as well as it has to be deleted. So in our addition also, we are going to show depreciation normal 6,16,000, and whereas in our addition or deletion also, we are going to show 6,16,000 from the from the net profit. So here you can see in the left hand side, depreciation including depreciation on account of revaluation of assets should be added, and similarly deletion from net profit, depreciation excluding depreciation on revaluation of asset has to be deleted. So in short, it means normal depreciation should be added to both this, it should be given effect in both the sides. It should be added to the net profit as well and deleted from the net profit as well. Next, depreciation, that is extra depreciation because of revaluation. So this has to be added to the net profit, but it need not be deleted from the net profit, because in the addition and deletion list, only addition is depreciation including depreciation on revaluation. So when we add, we are going to add 6,16,000 plus 2,70,000. But in deletion, only there is deletion of normal depreciation excluding depreciation because of revaluation. So in our minus, we are not going to consider 2,70,000. Next, salary and wages. Salary and wages is not in our additions and deletions list. Therefore, we are not going to consider it. Next, income tax. Income tax of 3,50,000. Now, income tax of 3,50,000 is there in the addition list. If you see the list, see here, the first point in the left hand side, it is income tax paid or payable. So income tax has to be added to the net profit in order to get the book profit. Next, outstanding customs duty which is not yet paid, rupees 17,500. So there is, in the additions and deletion list, there is nothing relating to outstanding customs duty. Therefore, we are not going to consider this particular item. Next, proposed dividend. Now, proposed dividend is in a addition list. If you see in the addition list, the third point, proposed dividend proposed or paid has to be added to the net profit back in order to get the book profit. Therefore, this proposed dividend, we are going to add it back. Next, consultation fees paid to an tax expert. It is nowhere given in the addition list. Therefore, do not consider it. Next, other expenses also is not given. Therefore, do not consider it. Next, what you have to do is, we'll just read the adjustment. Deduction, this is not relating to the provisions as per MAT. Depreciation under section 2, this is also not relating to the provisions as per MAT. These two informations is relating to provision as per normal provisions of income tax. Next, brought forward loss is 14 lakhs 80,000 for tax purpose and 40 lakhs for accounting purpose. So this is again for calculating the provision, calculating the tax liability as per the normal provisions of income tax. Now, unabsorbed depreciation rupees 70,000 for accounting purpose. Now, this we are going to take as per the normal as per the MAT provisions. So, unabsorbed depreciation, when you see, it is 14,80,000, but brought forward loss is 14,80,000, but unabsorbed depreciation is 70,000. So whichever is less. So 70,000 is less. Therefore, unabsorbed depreciation we are going to take as 70,000, and this 70,000 you are going to minus it from the net profit, because we have seen here brought forward loss or unabsorbed depreciation, whichever is less. Only for normal provisions of income tax you are going to take as per the tax purpose, but for calculating as per the MAT provisions, you are going to even compare the for accounting purpose. They are saying assume tax rate at 25%. This is again not relating to MAT, because in MAT 15% of book profit is fixed. This is again relating to your information relating to calculating tax liability as per the normal provisions of income tax. So yes, we have got the items which has to be added and deleted to the net profit. Now, whatever we discussed, we are just going to put the items marked in yellow in the particular format in order to derive the book profit. So now let us see the solution. Computation of book profit and tax liability as per MAT provisions under section 115 JB of the Act. So first, we start always with the net profit. Net profit is nothing but 11,80,680. To that, we are going to add three items. Depreciation in that normal depreciation, as well as depreciation on the revaluation of asset. So when we add depreciation, the total becomes 8,86,000. We're going to add income tax, which is 3,50,000. Proposed dividend, which is 60,000. So total comes to 12,96,000. Next, what are you going to minus? We are going to minus four items as already discussed. Amount withdrawn from general reserve 2 lakh, unabsorbed depreciation 70,000, normal depreciation 6,16,000. When we are deducting, we are only going to take normal depreciation. We are not going to deduct depreciation on revaluation of assets. Next, amount withdrawn from revaluation reserve to the extent it does not exceed extra depreciation because of revaluation 1,50,000. So amount withdrawn from any reserve has to be deducted. The total of all this four comes to 10,36,000. Therefore, the book profit is 14,40,680. And how to calculate the tax liability as per the MAT provisions? What you have to do is simply take 15% of book profit. So 14,40,680 into 15%, you get 2,16,102. Then you need to add surcharge. But is surcharge leviable in this particular problem? No, because the total book profit, the total income does not exceed 1 crore. Therefore, you are going to ignore surcharge. You're going to add health and education cess at the rate of 4% on 2,16,102. You get 8,644. So the total tax liability will be 15% of book profit plus the health and education cess, which becomes 2,24,746. So, as per the MAT provisions, the total tax liability is 2,24,746, and as per the normal provisions of income tax, which we seen in our previous lecture, it was 38,930. So, what is the tax that the X Limited is supposed to pay? Whichever is higher. Therefore, X Limited will pay 2,24,746 as tax for the assessment year 2020-2021 as per section 115 GB. And what is the tax credit that is going to be available? Tax payable as per MAT provisions minus tax payable by the normal provisions of income tax. Therefore, 1,85,816 will be the tax or MAT credit available. Students, have you all understood the problem number 3? Yes, students?
Yes, ma'am.
Okay. Now let us move ahead to problem number 4. Now henceforth, whatever problems are there, it is only to calculate the book profit or to calculate the tax liability as per the MAT provisions. Okay. So let us start. The net profit of APB Limited as per the P&L account for the previous year 1920 is 100 lakh after debiting crediting the following items. So, how are you going to start with calculating the book profit, students? Number 1, you're just going to take the net profit as per P&L account, that is 100 lakhs. So now we'll keep on discussing one by one whether a particular item has to be added to the net profit or deleted from the net profit. Provision for income tax, students. Should it be added to the net profit or minused from the net profit? Provision for income tax. Students, income tax paid or payable includes all provisions as well. So you have to add it to the net profit in order to derive at the book profit. Next, provision for deferred tax. All kinds of provision relating to tax has to be added to the book profit. Therefore, you will add it to the book profit. Next, proposed dividend. Proposed dividend also is supposed to be added back to the net profit in order to get the book profit. Next, depreciation debited to P&L account is rupees 12 lakhs. It includes depreciation on revaluation of asset rupees 2 lakhs. Can anyone tell me, now in this particular transaction item, depreciation debited to P&L account is 12 lakhs and that 12 lakhs is including revaluation of asset 2 lakhs. So what is normal depreciation here? Normal depreciation will be 10 lakhs and depreciation on revaluation of asset will be 2 lakh. For the normal depreciation, give both the effects, add it to the net profit as well as delete it to the net profit. But in case of revaluation of asset, only you're going to add it and you're going to ignore it while deleting from the net profit. So students, tell me how much are you going to add and delete the amount in respect of depreciation from the net profit? Can anyone tell me? Yes, students. What is the amount of depreciation you will add it back to the net profit in order to get
10,
book profit?
10 lakh.
Yes.
10 lakh, ma'am.
10 lakhs plus revaluation, depreciation on revaluation of asset. See here, additions to net profit. See this point number 5. Depreciation, including depreciation on account of revaluation of asset, should be added. But when you're deleting, only depreciation, normal depreciation should be deleted, excluding depreciation on revaluation of asset. Therefore, when you're adding, you add full 12 lakhs. But when you're minusing it from the net profit, only minus 10 lakhs. Is this clear, students? Yes?
Yes, ma'am.
Okay. Profits from the unit established in SEZ. This is nowhere given in addition list or deletion list. Therefore, what we are going to do is ignore this particular item, not consider itself. Next, provision for permanent diminution in the value of investment, that is 2 lakhs. So when there is a fall in the value of an asset and when a provision is made for that, that has to be added to the net profit. See your students, additions to net profit, last fourth item, provision made for diminution in the value of any asset. Investment is an asset, so that amount has to be added back to the net profit. Next, brought forward losses and unabsorbed depreciation as per the books of the company. So what we do usually in case of brought forward losses and unabsorbed depreciation, we take the total of both, and whichever is less, we are going to consider minus that particular amount. Now in case of brought forward loss, what is the total? 12 lakhs. And in case of unabsorbed depreciation, what is the total? 5 plus 3 plus 2, 10. So which figure are you going to minus? Brought forward loss or unabsorbed depreciation? Whichever is less. So this is 12 lakhs, this is 10 lakhs. So we are going to minus 10 lakhs since 10 lakhs is less. So always in case of brought forward loss or unabsorbed depreciation, take that particular amount, whichever is less. So now whatever we discussed, we are just going to put it in the format. And they're telling us to compute book profit of the company under section 115 JB of for the assessment year 2020-2021. So computation of book profit of ABP Limited under section 115 JB for the assessment year 2020-2021. Always you start with taking the net profit as per the P&L account 100 lakh. To that you're going to add all these items: provision for income tax, proposed dividend, depreciation debited to the P&L account, which also includes depreciation on revaluation of asset, provision for deferred tax, provision for permanent diminution in the value of asset. We have discussed all that. Less what are you going to do? Depreciation debited to P&L account, excluding depreciation on revaluation of asset, because when you are deducting, you're just going to deduct the amount of normal depreciation without considering the depreciation on revaluation of asset. Profits from the units established in SEZ, you are not going to consider anything, therefore it is nil. Next, amount of loss brought forward or unabsorbed depreciation, whichever is less as per the books of accounts. 10 lakhs is less, therefore 10 lakhs, and therefore book profit you get as 137. The columns have become up, like it is not in the same line. This depreciation on account debited is 10 lakhs. In case of profit from units of established in SEZ, there is no specified list for deletion from the net profit, therefore we are not considering it as 0. And amount of loss brought forward and unabsorbed depreciation, whichever is less, this is 10 lakhs. So our book profit comes to 137 lakhs. Okay, so they have just told to calculate here the book profit of the company. Therefore our answer completes here. Now for this particular calculating the amount of loss brought forward or unabsorbed depreciation, I have made a note here. Like I've just taken the total and have written that whichever is less is to be deducted from the net profit in order to arrive at the book profit. So is problem number 4 clear, students? Did everyone understand problem number 4?
Yes, ma'am.
Yes, students? Okay. So students, once more a quick revision. If normal depreciation, it has to be added also and it has to be minused also. But if it is depreciation on revaluation of asset, you have to only consider it in the addition, and in the deletion you have to not consider depreciation on revaluation of asset. Next, problem number 5. Now this also one by one we will be seeing. So now I'll just read the problem. The profit as per the statement of P&L account of XYZ Limited, a resident company, for for the year 31/3/2020 is 190 lakhs, arrived after making the following adjustments. Okay, students. Now, so here again, last they are telling compute the book profit for the assessment year 2020-2021. To compute the book profit, we know that we have to always start our answer with net profit as per the P&L account. We have to add some items, we have to minus some items, fixed items, then we will get the book profit. So let us start. So first we are going to take the profit as per the P&L account, that is 190 lakhs. Now let us see to that what are we going to add. So depreciation on asset, this you are going to add 100 lakhs as well as you're going to minus. Now let us see if any information is given for in case of depreciation on assets. So depreciation on asset is 100 lakhs. Okay, and in that the information is given is depreciation includes 40 lakhs towards revaluation of asset. So in this 100 lakhs, 40 lakhs is towards revaluation of asset. So what is the normal depreciation? Normal depreciation is 60 lakhs and revaluation on assets is 40 lakhs and the total is 100 lakhs. So can any student tell me what effect should I give in the net profit in order to get the book profit in respect of depreciation on asset? Can anyone tell me how much I should add depreciation and how much should I minus depreciation? Quick, students. Yes. Students, am I audible?
140 lakhs should be added, ma'am, and 100 lakh deleted.
Okay. Now your answer is slight wrong. I'll tell you why. Because they're telling already 100 lakhs. In 100 lakhs, 40. This depreciation includes 40 lakhs towards revaluation of asset. So already in this 100 lakhs, 40 lakhs is for revaluation of asset. So what is the normal depreciation? 100 minus 40. So 60 lakhs is normal depreciation. When you're going to add full 100 lakhs because normal depreciation 60 plus depreciation on revaluation of asset 40. But when you're going to deduct, you're just going to deduct the normal depreciation, that is 60 lakhs. Is this clear? If they would have given depreciation excludes 40 lakhs towards revaluation of asset, then it would be 140. But already this 100 lakhs is having the amount of 40 lakhs in it. Is this clear, students? Did everyone understand the depreciation adjustment? Yes. When you're going to add normal plus revaluation and asset depreciation. When you're going to minus, you're just going to minus normal depreciation. Is this clear? Yes,
Yes, ma'am.
Next, reserve for foreign exchange fluctuation. Now, they are not telling amount withdrawn from any reserve, because if it is amount withdrawn from any reserve, you're going to minus it, as we seen in the previous sum. Now it is reserve for foreign exchange fluctuation. So when you're creating any reserve, it has to be added to the net profit. You can see here in the additions to net profit, you can see that amount standing in revaluation reserve or any reserve that is created has to be added to the book profit. Is this clear, students? So now, reserve for foreign exchange fluctuation. So any amount standing in any reserve has to be added back to the net profit. So this we are going to add it back. Next, provision for tax. Tell me, students, are you going to add it or you're going to ignore this item? Quick. Provision for tax. Are you going to add this item or ignore this item?
Add.
Very good. Next, proposed dividend. Are you going to add this item to the net profit to derive at the book profit, or you're going to ignore this? Yes, students?
Add, ma'am.
Very good. You're going to add this. Next, what are you going to minus? First, all additions are completed. Next, what are you going to minus? Depreciation, only normal depreciation. So out of 100, normal is only 60, 40 is on revaluation of asset. So only 60 you're going to minus first item. Second item, what are you going to minus? Depends on additional information. Let us read. Profit includes 10 lakhs being dividend received from an Indian subsidiary company. Students, dividend received is an exempt income. Now, exempt income, you're going to minus it from the net profit. See your students. Number one, deletions to net profit. In that, you have exempt income. So here, dividend, whatever you're receiving from Indian subsidiary company, as you know, it is an exempt income. So 10 lakhs, you're going to minus it from your book profit, net profit. Next, provision for provision for tax is 16 lakhs, which includes dividend distribution tax of 2 lakhs and interest. Sorry, provision for tax includes 16 lakhs of tax payable on distribution of profit and 2 lakhs interest payable on income tax. So whatever taxes it is, maybe it may be dividend distribution tax or it may be interest on income tax, it has to be added to the net profit. So we have already given effect to this. So this is done. Next, amount of 50 lakhs credited to the statement of P&L account was drawn from the revaluation reserve. So 50 lakhs was withdrawn from the revaluation reserve. Now again I told you, amount withdrawn from the revaluation reserve should be restricted to the depreciation or revaluation of asset, students. If you'll remember, I told you amount withdrawn from revaluation reserve in the previous sum should be restricted to the depreciation on the revaluation reserve. Now amount withdrawn from revaluation reserve is 50 lakhs. Depreciation on revaluation reserve is 40 lakhs. So how much you will minus? You will minus only 40 lakhs, because amount withdrawn from revaluation reserve is to be restricted only to the depreciation amount on revaluation reserve. So what are you going to minus, students? First, you're going to minus this exempt income. You're going to minus the normal depreciation. You're going to minus the amount withdrawn from revaluation reserve, that is only up to 40 lakhs and not 50 lakhs. And the last point, balance of statement of P&L account shown in balance sheet asset side is 30 lakhs and unabsorbed depreciation is 10 lakhs. So if asset side your P&L account is reflecting on the asset side, it means it is a loss. So there is a loss of 30 lakhs and unabsorbed depreciation is of 10 lakhs. So what are you going to take? Students, unabsorbed depreciation or brought forward loss as per books of accounts, whichever is less. So which is less? You're going to take that amount as the amount that you're going to minus it from the net profit in order to derive at the gross profit. Is this clear, students? Yes?
Yes, ma'am.
Okay. So what are we going to do? Whatever we discussed, we are just going to put it in the format again. That is net profit as per P&L account 190 lakhs. Add depreciation, reserve for currency, exchange fluctuation, provision for tax, proposed dividend. You're going to get the amount, then less all this depreciation other than depreciation and revaluation of asset, withdrawal from revaluation reserve restricted to the extent of depreciation, unabsorbed depreciation or brought forward business loss, whichever is less, then dividend income. Okay, once you minus, you're going to get income under MAT, that is liable to tax. Is this clear? Is this clear, students?
Yes, ma'am.
Okay. Now let us see problem number 6. Again in problem number 6, they are asking us to compute the tax as per MAT provisions. So again for that we have to calculate the book profit. So XYZ Limited profit and loss account for the year ended 31/3/2020 shows a net profit of 75 lakhs. So we are going to start our calculation with net profit as per P&L account 75 lakhs after debiting and crediting the following items. So now you all are going to answer, students. Depreciation rupees 24 lakhs, including 4 lakhs on revaluation. Now, what is the amount you're going to add and what is the amount you're going to less in respect of depreciation? Quick, students, tell me. 24 lakhs is having 4 lakhs as revaluation depreciation. That means normal depreciation is 20 lakhs.
24 lakh is added, ma'am, and 20 lakh is deleted.
Very good. So here in our answer, 24 lakhs is added and depreciation other than depreciation at 20 lakhs has been minused or deducted. Very good, students. Next, interest. Next is interest to financial institution not paid before the due date of return of income, and income is rupees 6 lakh. So is this 6 lakhs rupees in our addition or deletion list? Anytime here in addition and deletion list, is any interest given? There is no interest given, so we are not going to consider this particular item. Third point, provision for doubtful debts. Students, tell me, provision for doubtful debts, should we add it or should we deduct it?
Added, ma'am.
Very good. So provision for doubtful debts, we have added here 1 lakh rupees. Next, provision for unascertained liability, means which you are not sure. You have made a provision for that 2 lakhs rupees. So 2 lakhs rupees has to be added or deleted. Obviously, it is an provision, so it is on your debit side of the P&L account. So if it is unascertained, you have to add it back. See here, students, provision for unascertained liability, add it to the net profit. So we are going to add this particular amount to the net profit. Next, transfer to general reserve. When you are withdrawing from general reserve, you have to less it. But when you're transferring any amount to general reserve, you have to add it. See here, students, additions to net profit is amount that you're transferring, standing to the revaluation reserve or transferring to the reserve, you have to add it. But when your amount is withdrawn from any reserve, see the second point, students, transfer made to any reserve, you have to add it to the net profit. But when you're withdrawing the money from the reserve, you have to minus it from the net profit. Now here, transfer to general reserve 5 lakh. You're going to add it or minus it, students? When you're transferring to reserve, you have to add it. No, students, here we have seen the second point, transfer made to any reserve, it should be added to the net profit. But amount withdrawn from any reserve, you have to minus it from net profit. So here is transfer or withdrawal. You're transferring to general reserve 5 lakh. So you're going to add it or delete it? Yes, students? Transfer to general reserve, what effect are you going to give to this?
Ma'am, add it.
Add it.
Add it to the net profit. Next, net agricultural income 16 lakh. What effect are you going to give to this? Yes, students, are you going to give any effect to this net agricultural income?
No, ma'am. Ignore it.
Next, amount withdrawn from the reserve. Students, amount withdrawn from the reserve 3 lakh rupees. Now, when you're transferring to reserve, you're going to add it. Now, when you're withdrawing from the reserve, what are you going to do it?
Deduct.
Minus it. So you have minus 3 lakh rupees. Next, other information is brought forward loss and unabsorbed depreciation. Brought forward loss is 12 lakhs, unabsorbed depreciation is 10 lakhs. So we are going to minus it. But what amount are you going to minus? Which amount? 12 lakhs or 10 lakhs?
10 lakh, ma'am.
10 lakh, ma'am. Unabsorbed depreciation.
Whichever is less. So 10 lakhs. Okay. Now, whatever we discussed in the entire problem, we have just put it in the format. Okay. First, you take net profit as per P&L account. You add all the additions. Usually, you add those items which are debited to the P&L account. You less those items which are credited to the P&L account. You get book profit. Now, book profit you got. How to calculate tax as per the book profit? It is nothing but 15% of book profit is your tax liability. So 15% of 58 lakhs is 8,70,000. Will surcharge be applicable in this situation, students? Will surcharge be applicable? Surcharge will not be applicable because our book profit is not exceeding 1 crore. If our total income exceeds 1 crore, then only surcharge will come into picture. So surcharge is nil. So total tax is 8,70,000. And in all the situations, you add health and education cess at the rate of 4%. So that comes to 34,800. So your MAT liability is nothing but 9,04,800, which is nothing but 8,70,000 plus 34,800. Is this clear, students? Did everyone understand problem number 6?
Yes, ma'am.
Okay. Now the last problem, problem number 7. This again problem is going to be solved by you people. Okay, I'm just going to ask you all whether you have to add or delete, because now we have done number of problems on MAT. Okay. So here again they're telling us to calculate, compute the book profit and tax payable on book profit as per MAT. If they give you an exam 115 JB means remember only as per MAT you have to calculate. If they tell you that in general what is the tax to be paid by the company, then you need to do as per normal provisions as well as per the MAT provisions. Whichever is higher, you need to consider that. Okay, the net profit of PQ Limited as per the profit and loss account for the previous year 1920 is 2 crore 56 lakh 80,770. So what I'm going to do with this net profit, students? I'm going to start my answer with this net profit. So see here, net profit as per the P&L account is 2 crore 56 lakh 80,770. To that, I'm going to do certain adjustments. Means I'm going to add some items minus some items. So shall we start, students? This answer is going to be given by you all. Provision for income tax. Tell me, students, what effect should I give for provision for income tax?
Added to the net profit.
Very good. So here we have added to the net profit. Next, provision for deferred tax. What effect should I give to this?
Add, ma'am.
Okay. Next, proposed dividend. What effect should I give to this?
Add.
Added to
Next, depreciation debited to the P&L account is 12 lakhs 650, and this 12 lakhs 650 includes depreciation on revaluation of asset rupees 4 lakh. So from 12 lakhs 650, 4 lakh is relating to revaluation of asset. So 8 lakh 650 is relating to normal depreciation. Now tell me, students, how much should I add and what is the amount I have to minus?
12 lakh 650 is added, ma'am.
Okay. And while minusing, should I minus complete or should I minus only the relating to normal depreciation?
12 lakh 650 minus 4 lakh.
No, you have to minus only normal depreciation. This includes depreciation on revaluation. Always while minusing, you're going to minus only normal depreciation. Depreciation on revaluation of asset, you're not going to exclude it. You're not going to consider it in your deductions. So only 8 lakh 650 you're going to minus. Is this clear, students? Depreciation part. Normal depreciation added as well as deducted, and depreciation on revaluation of asset only added, but while deleting, don't consider it. Is this clear? Yes?
Yes, ma'am.
Yes, students?
Yes, ma'am.
Okay. Next, profit from unit established in SEZ. What we have to do with this? SEZ, should we add it, delete it, or ignore it? SEZ, anywhere they have given you SEZ here? Can you see anywhere in the deletions addition? SEZ?
No, ma'am, ignore it.
Okay, very good. Next, provision for permanent diminution in the value of asset. When the provision is made for a fall in the asset, what are you going to do with it? We have done in a previous sum, students. Here, see here, provision for provision for last fourth point, provision made for diminution in the value of asset, that is fall in the value of asset. What you have to do? Additions to the net profit. So what are you going to do with point number 6? Add it or delete it?
Add it, ma'am.
So this particular we are going to add it. Next, brought forward losses and unabsorbed depreciation as per the books of the company are as follows. So now what we are going to do with this figures, students? Are we going to take minus all these figures, or what are we supposed to do with these figures? Tell me, students. We need to take the total of brought forward losses. We need to take the total of unabsorbed depreciation. We need to compare the both. Whichever is less, we have to minus it from the net profit. So I have done a working of that. That is note number. So losses brought forward added, it comes to 5,20,000, and unabsorbed depreciation added, it comes to 6 lakhs. Now what should I minus, students? Both 5,20,000 and 6 lakhs, or how? As per MAT provisions, what I am supposed to minus?
5,20,000, whichever is less.
Whichever is less, 5,20,000. So see here, amount of loss brought forward or unabsorbed depreciation, whichever is less, is to be minused. So minusing 5,20,000. Here you have to write C note 1, how you derive that 5,20,000. Okay, so we have completed with all the particular information. Okay, then once we plus minus it, we get book profit as how much? We get the book profit as 2,79,55,070 rupees. To that book profit, you're going to take 15% of book profit as the tax liability. So 15% of 2,79,55,070 comes to 41,93,260. Now tell me, students, will surcharge be applicable in this particular case? Since the income is more than
Yes.
1 crore. When your income is more than 1 crore but less than 10 crores, what is the percentage of surcharge applicable?
7%.
7%. So add surcharge at 7%. Surcharge is always tax on tax. So already your tax liability is 41,93,260. So you're going to add 7% of 41,93,260. You get 2,93,528. This becomes your total tax. And on your total tax, you're going to add health and education cess at the rate of 4%. So 4% of 44,86,788.7, which comes to 1,79,471. So your total MAT liability or the tax to be payable as per MAT provisions, that is as per section 115 JB, is 4,73,000. Is this clear, students? Did everyone understand problem number 7?
Yes, ma'am.
Okay. So now we are done with the problems on MAT. Usually you will get the repeated items also in your exams. So just remember, go through each sum. Today I'll be sharing the notes with you all. Go through each sum. There are some fixed items which are usually repeatedly asked in the exam. So know whether it has to be added, deleted, what is the amount to be added and deleted. So if in the exam they ask you a full-fledged problem, like as per the normal provisions as well as MAT, solve that, but don't waste your time. Read the question properly. What are they asking for? Only if they're asking under section 115 JB, so only your answer will be limited in calculating the book profit. So any doubts in this particular unit, students? Because we have completed with module number 6. It was a very small unit. Any doubts? Yes, students?
No, ma'am.
No,
Thank
ma'am.
you so much. Thank you so much, students.